What's up guys, Zine Lube here at Elio Forex, back again with another video. So as per request, I'm doing a video on the breakdown of our gold sells yesterday, and I hope that this video will be clear and beneficial to everybody that's going to watch it. So here goes. So first of all, I will use my line chart to identify the trend that we are currently looking at. All right, so trend lines in there. So currently I'm looking at a major downtrend, right? And then we've got this minor uptrend over here, right? I'm using the line chart because I find the line chart to be more refined in terms of identifying certain zones and levels of support and resistance. That's why I prefer to use my line chart more than anything else. All right, so those zones are drawn in, and then now we can take a look at the trade. All right, so first things first, I'm going to map out areas of support and resistance. So mainly resistance here, right? Here was a clear resistance. You identify this by the rejections of those candles to the left, right? Those candles to the left have some major rejections, so that shows us that there's a resistance in this area. All right, so now that has been drawn in, I'm going to drop down to a lower time frame. Now this is the 1 hour chart, right? What I'm going to add here is called session breaks or period separators on MT4, right? Since this is trading view, it's called session breaks. Now these session breaks are basically these white lines that will represent the beginning and the end of a new day, right? So these white lines represent the beginning and the end of a new day. So where this line comes in, that's the end of this, okay, since it was a weekend, so that's the end of the 15th of October. That's a Friday. Going over to the 18th of October, that's a Monday. Then the 19th of October, that's a Tuesday, right? So we are primarily going to focus on the 19th of October, which was yesterday, Tuesday. Okay, so what I like to do when I start analyzing, I like to map out the high and the low of the previous day. So over here is the high of the previous day, which was the Monday, right? And this here is the low. So primarily I take trades, for instance, sell trades off of the high of the previous day, and I take buy trades off of the low of the previous day. So when I stepped onto the chart yesterday and I had mapped out my previous day high, my previous day low, and I had mapped out my support and resistance, there's something that I want to bring to your attention, which I am not going to explain in detail right now, but I will be doing so at a later stage. Okay, so there's something that we call a hidden base right in this area here, right? It's called a hidden base. I'm not going to explain on it as yet, as it's not yet time for me to go into that series. Okay, so there's a hidden base over there, which the market did react to. And as I drop down to my H1, you'll notice that we had that very same candlestick play in this region right here. So there was another hidden base right over there. And as I refine it now, you'll notice that on the 1 hour chart, that is where we had major plays yesterday. So first things first is the doji candle that is seen in that area over there. Let me just send this to the back so that you can see the candles clearly. Okay, so you have a doji right on that hidden base or that area of resistance. We have a doji playing out in that area. So I want you to notice how those three candles in that circle over there are all reacting to that hidden base. And as we move forward, you'll notice that we've got these other two candles which spiked right through that hidden base. Both of them spiked right through and then closed right back below beneath these candles here. That's an indication that the market does not want to go any higher, right? So if the market is not going any higher in that respect, we know that we are looking for short trades. Now, already the confirmations that I have so far are first the area of resistance, number one. Then we've got that hidden base, number two. Then we've got the rejections of with the we've got that doji over there, so that will be my number three. And then these stop hunts to the high, that will be four. And if you remember in my previous video, I did mention that I like to take trades when I have at least three or four and or more confirmations. So already in this scenario, we have four confirmations of why we would want to be sellers. The fifth major confirmation would be that we are in a major downtrend, and this is primarily an induction trend to the upside. So this movement to the upside, in my opinion, is an induction trend, so meaning that we need to continue being sellers to the downside. Now I am going to show you guys how I enter my trades. Right now, I don't enter on an H1. I do sometimes, but mainly I like to go from M15, M5, M1 entries, right? Okay, so here on the M15, let me just remove these few things over here so that it's clear. And that lastly. Okay, so we have an M structure, or a double top as many would like to call it. This is a double top at an area of resistance. So there's a whole lot of confluence. That's another signal. So that's 6 confirmations that we currently have for the sell. And I want you to notice that we have a smaller M structure in a larger M structure. So that is just more confluence, right? Now, how do you confirm whether an M structure is valid? I'm going to add what we call an EMA, an exponential moving average. Now, there are rules in terms of entering on a moving average, and these are the rules that I follow. So when entering on an exponential moving average, this is the 13 EMA, right? The market must cross above the EMA. It must cross and close below the EMA, cross back above and close, and then lastly close right back below again. So it must cross above, cross back below and close, cross back above and close, and then cross back below and close. And then after that last close back below the EMA, if it's a sell-off, then we enter right after that close below the EMA. If it's a buy, you just have to invert your chart and you will see the buy, right, for a double bottom, which is a W structure. So we had our trades in at around about 1780 yesterday, right around 1780, 1779, right around here, right, because we had a bit of retracement. We jumped in on that retracement, and we did have more or less 100 pips, 100 to 130 pips, I think, and we managed to catch that off of that move. Now, because I still believe we are in a major downtrend, we are still holding some of our cells, right? We are still holding some of our cells, and I am looking at taking profit way down here. Now, of course, my safest take profit at this point would be in this area right over here, right? But because I assume we are still in a downtrend, my safest take profit will be at 1750, because I trade from zone to zone. So that is why I'll be looking to go down there, which would give me an odd 300 or so pips. But please do not take this as trading advice. Merely take this as my own opinions. If you do decide to take this trade, be very careful. Don't just jump in anywhere. Jump in when you have confirmation and a lot of confluence to the downside. So with that being said, guys, thanks so much for joining me. Thank you for watching. Remember to like and subscribe and share the video.